Yeah, get his slides up there.
Hi, I'm Dave Walker. While the slides are being pulled up, let me, if I can, make a couple of provocative statements to get your attention. First, many governments around the world at different levels have grown too big, promised too much, and need to restructure, including the United States. Accounting is how you keep score, and how you keep score matters, no matter what business you're in, or whether you're even not a business, whether it's in sports or many other things. And thirdly, I'm also a student of history. Let me give you some common denominators dealing with the Roman Republic, which was the first major republic, but it did not stand the test of time. It fell for many reasons, one of which was lack of political civility, fiscal irresponsibility by the central government, overconfident and overextended militarily around the world, and inability to control its borders. Do those sound familiar? They should, at least in the United States and those in many other countries around the world. So what I would respectfully suggest is that we need to achieve a fundamental transformation of what government does, how it does business, in order to provide better results for the people with the resources and authorities that it has in a sustainable manner. And in order to do that, you need truth. What is the true situation, not only in the absolute, but how are you trending and how do you compare to others? And you'll see some of that. Whether you're an individual, whether you're a company, whether you're a country, whether you're a college or university, you need to know how are you doing, are you getting better or worse, and how do you compare to your competitor group or comparator group. And if you don't know all three, you don't know what you need to know. We need transparency, truth, transparency, and we need leadership. People who are willing not just to live for today, but are willing to make the tough choices to be able to create a better tomorrow and to discharge their stewardship responsibility. And what does that mean? It means as leaders in whatever we're doing, we not only have a responsibility to generate positive results today, not only to leave things better off when we leave than when we came, but better positioned for the future. It's a world that our country was built on, but that many of our leaders have strayed from. There are a number of common denominators between challenges being faced at different levels of government. Now, these are in addition to increasing debt burdens, but I'm going to add that point to the slide so I don't have to say this again. So in addition to increasing debt burdens, these are some of the common challenges: changing security threats, outdated tax systems, excessive regulatory burdens, unfunded retirement obligations, escalating healthcare costs, expensive and yet ineffective welfare systems, and deteriorating critical infrastructure. They vary by country to a different degree, but frankly, these exist across the globe, irrespective of geopolitical boundaries, both internationally and domestically in the U.S. Now, so a lot of people talk about balanced budgets. My view is that's BS. I'll translate that if you want later. The fact of the matter is 49 of 50 states have a balanced budget requirement. Very few have balanced budgets because of the way they keep score. They keep it on a cash basis. And some states, including my own, Connecticut, have the audacity to borrow more money than they need, and because they have money left over from the borrowing, they call that a surplus. Now try that with your bank. Go down, try to borrow money and see if you can do the same thing. And so the real issue is not to balance the budget, because they're largely based on cash flow. You accelerate revenues, you defer expenses, you ignore long-term obligations because you don't have to meet them until down the road, and you may have the audacity to borrow money and call the leftover money a surplus. So what I focus on like a laser, and what I think our country and many others need to focus on, among other things, this is one metric, is debt as a percentage of the economy. And in the United States, this is our history since our founding in 1789 as a republic, okay? We never had over 35 to 40% of debt as a percentage of the economy until World War II. To win our independence, War of 1812, Civil War, World War I, Great Depression, never over that until World War II, where obviously we were betting the ranch and trying to help save the free world. But then we brought back fiscal responsibility. We grew the economy, and we didn't pay off a dollar of debt, but debt to GDP plummeted. Now, unfortunately, our situation in the world is different today. Our demographics are different today. Many things are different today. Our political system is more dysfunctional today. And so now, debt to GDP is headed up. It's already too high, and it's stated to go much higher. So we have to figure out how are we going to end up getting that under control through a range of policies. And the other thing is having been the Comptroller General of the United States, which is like the Auditor General of the United States, Chief Accountability Officer, I was the one that had to audit the financial statements of the U.S. and sign the audit report. And, you know, frankly, most Americans don't read those things. Most members of the Senate and the House don't read those things. And the biggest numbers are in the footnotes to the financial statements. The biggest numbers aren't in the financials, they're in the footnotes. So what I did is I applied a simple principle. It's called math. And I added up the numbers from the financial statements and the numbers that were in the footnotes, and then I also said, you know, most Americans can't relate to $1 billion, much less $1 trillion or tens of trillions of dollars. So let's try to change some of these numbers in terms that they might understand, like per person, per household, so they can then compare it. Well, here are the numbers. In 2000, when you add up the on and off balance sheet numbers for the U.S. federal government was $20.4 trillion. We had $5.3 trillion in debt, but $20.4 trillion in largely off-balance sheet obligations dealing with Social Security, Medicare, other social insurance programs. That 20.4, which was $72,500 per person, escalated to $65 trillion by the end of 2015, or about $203,000 per person, and median household income in America is about $52,000. Now that's where people can understand it. Now at the state level, I believe that one of the things that we have to focus more on is financial assets. Financial assets. Because some of the things that we have no intention to sell, we're not going to realize value on. There are other things that maybe we should sell and realize value on, like state-owned enterprises or excess real estate or whatever that might be. So to focus on financial assets and financial obligations. And in doing that, for PricewaterhouseCoopers, who I work for, we put together an index that takes on-balance sheet and off-balance sheet numbers, financial assets, financial obligations, divides it by the number of households, and considers median household income. Some states are wealthier than other states, right? So what that did is it gives us this ratio. And what it says is that we have 11 states in the United States that have a positive financial ratio, 39 that don't. But then you got to look beyond the numbers. Look at Alaska. Alaska is in the best position on a relative basis, but guess what? Alaska has huge budget problems now because energy prices have plummeted. In addition, when you lift the hood and you look underneath, you see that while Alaska has the largest reserves, it has the most unfunded retirement obligations per household of any state in the Union because they didn't fund their retirement plans. They took the money, they put it to the side, they're investing it. You get paid, by the way, to live in Alaska, although you got to have more winter clothing up there. And so you look and you see this to get a relative sense of where you are. Unfortunately, I live in Connecticut, which is number 47 out of 50, and one of the states that has the audacity to borrow money and call the excess a surplus. Now, what about countries? I think one of the things that we have to do is that we have to get a sense of fiscal sustainability. Not just where you are, but where you're headed, and can you sustain. In 2011 and 2012, this is the first one, I was head of something called the Come Back America Initiative, which was a not-for-profit promoting fiscal responsibility and sustainability, government transformation at the federal, state, and local level in the United States. I partnered with, Stanford University to be able to produce this particular index. And it's an index of fiscal sustainability for 34 nations, largely OECD nations. And at that point in time, we looked at fiscal space, how much space did they have of debt to GDP, their fiscal path, how quickly were they moving towards that theoretical limit, and their fiscal governance. What kind of mechanisms and controls did they have to provide fiscal integrity and sustainability and to promote fiscal responsibility? At that time, Australia was #1 in the world. I would respectfully suggest that when we do a new one, and I'm planning on doing a new one for PwC within the next year, that New Zealand will probably be #1 in the world for a variety of reasons. Congratulations, Ian. But if you look, you look on the first page, well, what about the United States? Sorry, you got to go to page 2. The United States was number 28 out of 34, and yes, Greece was number 34. But the fact of the matter is that if you don't understand not just where you are, you have to understand how you compare to others. It's critically important. And so we need more metrics to try to be able to get in a sense, not just where we are, how we're doing, but how we compare to others, not just for today, but also over time. Now, there's a lot of reasons that governments need to transform at all levels. You can read as well as I can, but this basically comes back to what I said before. The world's changed. Government entities' position in the world are different. Demographics are destiny. We have changing security threats. We have a variety of different things that come back to the point that I made to begin with, which is government's grown too big, promised to not much, and needs to restructure in order to do a better job and in order to be sustainable. But it's tougher to make transformation happen in government. And, pardon me. And I left off the #1 factor, which I'll add to the bullet, but I want to mention to you, and that is, who runs government? Politicians. And with all due respect to politicians, and I do respect them, the fact of the matter is they have a disproportionate amount of myopia, short-sightedness, tunnel vision, looking at one issue at a time without understanding the bigger picture, the interconnectivity, the interdependency, the domino effect, and self-interest. #1 self-interest, get reelected. Stay in power. And that includes the United States of America. So the biggest problem you have is who's running things. Secondly, we have limited to no competition. Government, for the most part, doesn't have competition. Competition breeds innovation. It forces accountability. It forces the efforts to try to become more economical, more efficient, more effective. Government generally doesn't face competition. It has less continuity in key positions. At least in the United States as an example, every time you have an election, you got a whole new cabinet. You got a lot of other new people who are in charge of things, if you will. We've got greater transparency, which I would argue is a good thing, but it also causes some people to be risk averse because there's greater transparency, less flexibility, more regulations, more cultural challenges, a risk averse culture for all these reasons, and fewer incentives to take risk and to do the right thing, and inadequate accountability mechanisms. And so these are some of the things that we have to deal with in order to treat the disease. Now, I was head of the Government Accountability Office for 10 years. We're the auditors of the United States, and I felt that we had a responsibility to lead by example, to be as good or better than anybody else in the U.S. government or any supreme audit institution in the world, and that we should reform ourselves. And we did. And I could go into a lot of details. You can catch me in the halls or whatever else. I'm going to be here all day today. But the fact is that these were the results. We put together a strategic plan. We restructured our agency. We focused on outcomes. We improved transparency. We leveraged technology. We modernized our human capital practices. And the bottom line is, and I'll pick a few numbers, we tripled our financial results. We generated a $110 return for every dollar invested in the GAO. We reduced our headcount. We improved the adoption of our recommendations. We were much more sought after by the Congress for our opinion about what we think ought to be done, and by the press, I might add, as well. And yet we did all of that and still being ranked one of the best places to work in the U.S. government and with a very high client satisfaction score. Now, what about accounting and auditing? I wrote an article recently in a publication in the United States called Government Executive, which is for top government executives, saying that it's time that we look at how do we need to revise federal financial reporting and auditing, and many of these relate to the international front and state and local as well. First, focus on financial assets. Our financial reporting needs to focus on financial assets that have potential to realize value. Secondly, that in the case of the United States, as an example, we have a number of additional liabilities and unfunded obligations that aren't on the balance sheet. And maybe you want to call them a liability, maybe you want to call them an obligation, maybe you want to call them a commitment or a contingency, but what we ought to be doing is recognizing that government is different. It is not a commercial enterprise. And therefore, we ought to figure out ways that we can end up pulling some of this information from the back, presenting it in an appropriate way in a more comprehensive statement, and that we can translate those numbers into something that people will understand per person, per household, percentage of GDP, et cetera. We also need a new statement of fiscal responsibility and intergenerational equity. You know, you've heard the old story, don't tax you, don't tax me, tax the person behind the tree. Well, today, because of fiscally irresponsible policies, it's don't tax you, don't tax me, tax the baby on your knee. We are basically mortgaging the future of our children, grandchildren, and generations unborn, and they don't have a vote. And we're cutting back on the investments in their future. That is irresponsible when they're going to face a lot tougher competition. We need to have a statement of key performance indicators. We don't have a stock price. What are people getting for the money that they're paying and for the authorities that the government has? Value for money. We need to also have additional disclosures, and we need to change the audit opinion for auditors to directly address expectation gaps as to what the audit opinion is and what it isn't, to focus more attention on key controls, and to encourage emphasis paragraphs when there is a clear, significant risk and unsustainable path. When I was Comptroller General of the United States, I put an emphasis paragraph in the United States financial statement saying that while I was pretty confident it was going to last at least another year, and therefore didn't need a going concern qualification, that it clearly was on an imprudent and unsustainable fiscal path that needed to be addressed, and it was in the auditor report. In conclusion, I think I've pretty much covered this already, the elements of reform. In conclusion, governments at all levels, all around the world, to differing degree, need transformation, and many need financial restructuring. Supreme audit institutions such as the USGAO, the National Audit Office in the UK, and various courts around the world that I used to be on the board of and head of strategic planning, they should lead by example. They have an important role to play. We need financial reporting and auditing reforms to help facilitate and expedite the needed changes. How you keep score matters. Government transformation leaders will need independent, comprehensive, and integrated results-oriented advice and implementation assistance. They'll need effective targeting, communication, and execution strategies. And obviously, PwC can help. But let me go back, if I can, before I close out. I'm involved behind the scenes in something called Puerto Rico. Puerto Rico is a commonwealth of the United States, a territory of the United States. It has $72+ billion in debt, in addition to huge unfunded retirement obligations. It has 3.5 million citizens, and median household income in Puerto Rico is less than $20,000 a year. If I ranked it on the 50 states, it would be number 50 by a wide margin. But it is not eligible to use the United States Bankruptcy Code. And so the Congress of the United States is moving to enact legislation to be able to impose a financial control board that will force everything to be on the table. Yes, debt bondholders are going to have to take a haircut. But you also have to look at the size and role of government. You have to look at what are some of the state-owned enterprises that should be privatized. How do you rationalize the size of the workforce? How do you modernize the compensation programs? How do you make sure that the retirement programs provide a reasonable, affordable, and sustainable benefit that the government will actually deliver on? How do you modernize your tax systems? How do you end up streamlining your regulatory structures, et cetera? These things have to be done. Watch Puerto Rico, because how that gets resolved may well be a model for how other restructurings occur in the United States and elsewhere around the world. Thank you very much.